A massive crypto hedge fund has caused chaos in the market, and listen up because you could be affected. 3 Arrows Capital has failed to meet its loan obligations. The Singapore-based company, founded in 2012, has been in the spotlight for several months, and now one of the entities that granted it a lump sum loan, Voyager Capital, has filed for bankruptcy as a result of the hedge fund's failure to make payments. Estimates suggest that 3 Arrows Capital blockchain-related assets are valued at over $3 billion, spread over a multitude of tokens, DeFi projects, gaming platforms, and even trading tools. Although to date, they've not made this information public, and their lack of transparency is not helping their case. But how did we get here? Well, 3 Arrows Capital held a significant portion of the Grayscale-managed Bitcoin fund, acquiring 39 million shares at the end of 2020. The shares, called GBTC, represented about $1.2 billion and even included a premium. In other words, for each Bitcoin deposited in Grayscale, the fund delivered 1 GBTC plus an extra amount as a reward. 3 Arrows has used these GBTC as collateral to acquire more loans. These loans were subsequently used, for example, to invest in Terra, Do Kwon's project, which collapsed in May. This was the start of the domino effect. As if this weren't enough, 3 Arrows also requested a loan from Voyager, which interestingly is not a lending company, it is a crypto exchange. We're talking about a loan of 350 million USDC and 15,250 Bitcoins, a total of about $650 million. But the fund appears to have defaulted on payments. In an attempt to speed up the recovery of capital, authorities of the British Virgin Islands, where 3 Arrows is based, have issued an order to liquidate the fund. And on the other end of the world, the Monetary Authority of Singapore has reprimanded the hedge fund, as apparently their license does not permit them to manage assets valued at over $250 million. But that's not all. It would appear that 3 Arrows have also provided false information to regulators. That false information could involve some fabricated accounting statements that would have enabled the company to apply for loans at different companies. 3 Arrows Capital started making headlines for all the wrong reasons in mid-June. The block announced that the hedge fund is figuring out how to repay lenders and other counterparties after it was liquidated by top-tier lending firms in the space. The CEO of the hedge fund also took to Twitter to address the issue, highlighting their commitment to work this out. As mentioned in our video right here, as well as the description box, 3 Arrows sold about $40 million in ethers to recover liquidity. Now, the question is, how will they meet their obligations? Will 3 Arrows Capital be able to pay off all of their debt? Doesn't seem like it, as the fund itself has proceeded to file for Chapter 15 bankruptcy in the United States. This is used not only to expedite non-payment procedures, but also to grant protection to debtors' assets. So the idea seems to be to preserve the fund's assets and pay off all of its debts wherever possible. Debts that don't only include Voyager Digital. 3 Arrows has also requested loans from other entities such as BlockFi, which stated that a large client failed to meet obligations on an over-collateralized margin loan. The client mentioned could easily be 3 Arrows Capital, and this domino effect could very well make its way to FTX. Alameda Research, linked to the leading FTX exchange, has also granted a line of credit to 3 Arrows worth $200 million, of which $75 million have already been used. The outflow of bad news sees no end. It all started with Terra's crash, which generated panic in the market. Then Celsius Network went on to be in the eye of the storm after suspending all withdrawals on its platform. Now, following 3 Arrows Capital's disastrous management and Voyager's bankruptcy, the situation is more delicate than ever. We'll have to wait and see what measures are adopted by these companies to regain trust, and above all, how a domino effect of this scale will be prevented moving forward.